welcome. This is our 7th listening session that we've had, so I want to thank everyone for coming on and being so in it, on it, for this time that we've, this crazy time that we're living in. We're going to talk about state and federal policy updates today, a couple of Zoom pieces. Just so you know, your audio is muted. You do have control over your own audio. You can take your cursor down the bottom of your screen and you'll see the mic icon on the left. You'll also see a chat box, and everybody test out the chat box for me by typing in your name and your organization into that chat box. It's that little icon that looks like you're reading a cartoon. And we are recording this. You're free to share with your colleagues. We'll send all the registrants a link as soon as we can to the recording. We're also happy to give you a copy of today's slides. They're more, for these sessions, they're more used as conversation markers rather than, you know, they're not necessarily always chock-a-block of information. But I think Juan Carlos might have some interesting information for you. So we'll send the slides out. So what are we going to talk about today? We're going to talk about state policy, what's new. We've got a friend, Mark Herbert, a CAMEO board member, and he's from Small Business Majority. We have him talking about the latest in state policy. Then we'll talk a little bit about implementation and the State Loan Guarantee Program, which is available for your clients to get some loans, source of loans. Then we'll talk about federal policy, what's new in the PPEIDL. We're, instead of Awesta Sarkash, who's the lobbyist, not the lobbyist, but the advocate for Small Business Majority, we're going to have Mark do that and talk, and then we'll have some conversation with Mark Quinn, who's CAMEO Senior Advisor. So I want to say hi to everybody. Hi, Lucy from Cal Nonprofit. Erwin from FDIC, you've been a faithful attendee. Thank you. Leslie from Sierra Small Business Development Center, great to see you. I'm not going to be able to read everybody, but it's great to really see broad number of people from all over the state, really. Ontario, thank you for coming. Jim Baird from the Bay Area Development Corporation, Jorge Letkeman, I think you're OCED, which I think is in Fresno, if I'm not mistaken, and Sonia from the LA Mayor's Office. Hi, Sonia. And Joanna from 3 Corps. So we really have people from all over the state. It's really, really great to see everyone. With that, I just want to let everybody know a little bit about what's up at CAMEO. We are going to go weekly with these state and federal small business updates with Small Business Majority. Looks like we're going to do that at 10 a.m. on Fridays. We're going to talk a little bit more about that. So look for that in an announcement in your email. On Tuesday, we'll be doing how to do a profit and loss statement with Susan Brown, and why it's important in the COVID time of COVID is because it will really help your businesses like kind of figure out what some of their next steps are. You can find our webinars on our resource page, and I'll pop these links into chat in a moment. And want to let everybody know we do have another source of capital might be something that you can, might be crowdfunding, and there's a crowdfunding better list of all the different platforms that people can register on. And Mark, if you want to pop your COVID resource page into chat, that would be super helpful, I think, for everybody as well. I know Small Business Majority has a big one as well. So with that, I am going to turn it over to Mark, and he just popped in his resource, and I am going to mute myself.
Excellent. Do we want to do slides, or should I just go ahead and dive into the state updates? We don't need slides if you don't.
No, I didn't make it. We didn't do any. If you want to do slides, you can do slides.
Now let's just make a conversation. So if folks have questions, feel free to chime in. I'm happy to chat. I think there are probably enough of us that we can do that. So just a couple things. I just want to walk through one sort of a little. We just released a poll of California small businesses this week. We'll give you a couple of top lines on that, and then want to walk a little bit through sort of where we are with the California budget. What's happening? What are the priorities? What's going on as it relates to small business priorities, and then also sort of really briefly, like what's next, like what's coming up, and how should we be thinking about engaging, that sort of thing. So from our poll, so we did a poll of California small business owners. Roughly 90+% have said that they've been impacted negatively by COVID. So that's 4 million small businesses, and our polling shows that roughly 90% of them are saying this has impacted my business, which is a huge deal. But the number that's really concerning is that roughly 40% or 42% have seen their revenues drop by half or more. Right, so folks, this is stuff you guys all know, that businesses are really struggling. And then about a third of businesses have already said that they've closed. Another 17% say they're going to close in the next 2 months. So all sort of the catastrophic economic impacts that you guys are all seeing with your clients is absolutely bearing out in the data, and so obviously is very concerning for all of us. So from a state level, a lot of folks are really concerned about what's going to happen to our state budget. And just for a little context, so in January, the governor came out with a $220 billion budget for the state of California. Part of the challenge with our budget is that it relies significantly on higher earners, so income taxes on higher earners, as well as capital gains tax, right, when folks sell off their stock and the money that they make. This year, just from capital gains, so just from rich people selling off a bunch of their stocks, like with IPOs and stuff like that, just from capital gains, the state was expecting to take in around $30 billion from capital gain taxes. And last time in the Great Recession, they saw capital gains taxes drop by 80%, and most experts think it'll drop by more than 80%. So just from capital gain taxes, we're looking at least $24 billion or more of a hole getting blown in the budget just from capital gains. And I know that we've heard, and that doesn't count like the income taxes on top of that, the sales taxes we're losing, all that state revenue that is not going to be available for any sort of budgeting programs coming this year. And to put that also in context, I know we've heard a lot about this big state reserve, this rainy day fund that we've been creating, which, to be fair, has been pretty significant, but it's $20 billion. A lot of money, but not a lot of money when you think about the loss in capital gains taxes alone may very well eat up the entire rainy day fund if we try to move forward with a budget at the same level. So the big challenge and the big question is going to be, what's the budget going to look like, and what's going to get signed into law? So for us, what we're looking at, and what in conversations with Heidi and with Carolina, sort of the things that we're prioritizing and trying to think through, how do we prioritize these funding sources? So one is the money that's for small business development centers and women business development centers, right? That massive investment that the state made. We're going to be prioritizing that to making sure that we're saying that is an investment that needs to stay consistent. Even if you're cutting everywhere else, you have to keep SBDCs and women business centers whole, and CDFIs. We need to make sure that that funding stream is consistent. So I'm sure Heidi will be asking you guys all to engage and join in advocacy around that, which we'll be a part of. And so that's one. And then the second important piece of the puzzle, many of you have heard, and we'll hear a little bit more about it in a minute, this great $50 million lending fund that the governor set up. There are going to be more conversations around how do we maximize that? How do we make sure that those dollars get to those small businesses who are stuck at the back of the line when it comes to the Paycheck Protection Program, right? We know so many of our folks that we care about and the folks that we work with are waiting at the back of the line as all the banks process the medium to larger businesses. And so we want the state to prioritize relief and resources for those really small businesses at the back of the line. So we're going to be prioritizing sort of how are we making those lending funds work well. So that's sort of the two main things. In terms of sort of, what's happening beyond just sort of lending, I'll just sort of mention two things that we're tracking. One is obviously the governor did this moratorium on eviction, right, for commercial property. With May 1st around the corner, I'm sure you're already hearing it. I'm sure we've been hearing it. Business owners saying, I haven't been open for a month, right? Like, how am I supposed to pay my rent or pay my lease? And so we know a lot of cities have done moratoriums on evictions, but that's not debt forgiveness, right? They still owe that rent. They still owe that lease, even if they can't get evicted. And so we're hopeful that maybe something might happen to provide some level of relief. And then the second thing that's important to note is on Tuesday of next week, self-employed folks can start filing for unemployment on the 28th. You can file for unemployment as a self-employed individual. There's a new portal through EDD that'll be available. So that's something also to think about. And then as we think about what's next, sort of what's moving forward, May 5th, members in the legislature are going back to work, probably each only bringing one staffer with them. Each committee has been told they're only going to get one committee hearing. So it's going to be a very targeted bill packages that'll be around the budget and maybe some COVID relief stuff. And we'll see what that schedule looks like, and we'll see sort of what rolls out, and the policy priorities that I mentioned earlier hopefully will be a part of that. But that's sort of, and then after May 5th, then the big one is going to be about mid-May. The governor's going to come out with what is called the May revise. So that's when the governor's going to actually have to say, this is what I think the budget's going to look like. And then that's when the real work's going to start, when the budget and the Assembly and the Senate get together and they hash out, how are we going to spend these limited resources and where are we going to cut? And that process will happen from like mid-May till mid-June. They have to pass a budget by mid-June. So that's going to be a very intense month. And obviously we'll be engaged in making sure that small business priorities are included in the budget. So I'll stop there. I'm happy to chat, take questions, or Heidi, if you want to move on, or start down the really cool Governor 50 million loan fund program.
Yeah, and I just want to add to that some of the things that we're advocating for at CAMEO, besides, like Mark said, securing the funding for the women's business centers and the small business development centers, making sure CDFIs stay whole, and that they get, one of the big things that we hear from the CDFIs is the liquidity problem, that they don't actually have money to lend. So we want, get very affordable, as in 0% capital for them to lend out. That's something we'd like them to do. And also extend the money is available to other nonprofits who are doing business training and things. Not everyone is an SBDC or a women's business center, and there's a lot of really important nonprofits doing really important work in the communities and making sure that they have money to continue doing the work that they're doing. On the loan, I'll leave the loan guarantee program till later, but one of the big things that people would like to see are fee waivers on that. The borrowers, they're not inconsequential, and that would help get the money out. Also, CAMEO is looking to something we supported in the past. We're going to continue to support it. Is the Cali ITC for ITINs. And Mark and will talk a little bit about grants to micro businesses at the end, a campaign you can get involved. So CAMEO is in the process of getting our letter together and our document, what we, and I keep pulling ideas. There's some really great ideas, but at some point we're going to put this forward in the very near future, probably next week, and we'll probably be asking you to sign on for a letter, either if it's not next week, the week after, and show your support. It's really going to be an advocacy thing. The more we can wave the flag, and I think if you all have figured out by now, I think small businesses have gotten a bigger platform than they ever have had before, and more people are concerned with small businesses that I've seen. So it could be a very ripe, opportune moment to chime in. So with that, I am going to turn it over now, Mark, and Juan Carlos Hernandez of California Southern share his screen, which I was not doing. Now I understand why. I thought I was sharing it on my end, but with the whole phone kerfluffle, I was not sharing my screen. But I'm going to turn it over to Juan, who's going to talk a little bit about the state loan guarantee program, and then we'll move more into federal stuff. So take it away.
Sounds good. Thanks, Heidi. Thanks, everyone. Is everybody able to see my screen at this point? It should basically have the California Southern Small Business Development Corporation. Okay. So what we do is obviously, Mark had mentioned a little bit about a $50 million trust fund that the state has actually put out. This is not a direct loan to the small businesses. However, one of the things that we're doing for this particular scenario with the COVID-19 is the fact that we are looking to work with many of the CDFIs as well as the local lenders that are still putting capital out there in the economy to be able to leverage that for folks that have actually been affected by COVID-19, where they can get a guarantee up to 95%. What that has done is it has really established some of the CDFIs who have been able to obtain capital to lend to some of these small businesses. In this particular case, between Southern California, Northern California, Central California, there have been a number of micro lenders that are looking to put money in there. I know it's not the best fix for everyone. However, there are businesses that unfortunately are not eligible for an SBA product, whether it's the Emergency Injury Disaster Loan Program or even the PPP program. They're basically left out in the dust. And unfortunately, fortunately for us with the state that has provided this trust fund, we're able to identify those particular small businesses that have not been able to qualify for those programs and provide them with loans, up to $50,000 with very minimal documentation. And as far as minimal documentation, that would be depending on the micro lender that you're working with. They would be requiring basically 1 year's worth of taxes, perhaps, between 3 to 6 months worth of monthly statements. So there's a variety of different things that come through. We, as in the FTCs, we're not a direct lender. So we're working with microloans throughout the state of California. There are basically 7 of us. This program began, several decades ago. We do have a location in Fresno, Los Angeles, Oakland, Sacramento, Salinas, Santa Ana, and of course, we're located in the San Diego area. However, part of what we do normally is we work with our lending institutions. Our normal program only guarantees up to 80%. However, for this particular COVID disaster loan program, we're basically able to guarantee these loan requests up to 95%. However, the only caveat really is that for one reason or another, they were not eligible for an SBA product. So we do have that program where we can guarantee these loans with any of the participating CDFIs. You do have to be enrolled in the program in order to utilize it. And if you haven't enrolled, I really strongly encourage you to do so. Even if you decide you're not going to enroll anything just yet, you want to be ready in the event that you do have access to some of the capital, and obviously ensure that you can protect that investment as much as possible. Again, if you're lending at $50,000, you're really only risking $5,000 of that loan to the borrower, because we will be covering that 95% in the event of any type of a default. Obviously, we're still looking at the primary repayment source of their cash flow. Collateral in this particular scenario is obviously I want to say, and this obviously is not a real survey, conducted, but we're basically estimating about 95% of these are going to, the collateral is literally just a symbolic scenario of putting a UCC on the business's assets. The way that this really works, again, we're not a direct lender, but we're working with the actual lenders. We need to receive an actual packet from the bank or the financial institution where once they approve the loan or the loan request, they're sending it over to us technically just to evaluate, review it. We're not going to be doing a heavy underwriting for these particular loans because we want to be able to move quickly on our decisions so that the lenders can deploy these funds very, very quickly. A couple of things, we've done a couple of new programs with kind of a streamlined process. However, we're basically hitting a maximum amount of those at this point. But again, if you as a CDFI have borrowers that you want to lend money to and basically continue to secure or minimize your risk and losing that principal amount, I strongly suggest that you utilize us. Again, the only item that we're looking at is the borrower has to meet the lender's criteria. We're as opposed to SBA, we don't dictate to what type of criteria or what type of lending instruments the lender has to utilize. If it fits their model, if it fits what they're looking to do, they're more likely going to approve it. However, they're going to be normally these are enrolled with us because of either a collateral shortfall or they maybe had 1 year of not enough income or something to the extent that just did not fit the lender's criteria on the spot, but they're still willing to make that loan with our guarantee in place. Again, they should not, basically we're technically using SBA's definition of a small business. It can be, the one thing that we are able to do is folks that are managing a nonprofit group. So nonprofits do qualify for this program. Small business owners, small business owners that are either undocumented or they're only doing this as an ITIN. However, they still have to have a certified business that is registered with the state of California. So those are the folks that we're looking to help specifically with this COVID-19 disaster loan program that has been presented. Right now, it's going to be very difficult to have any form of startups be financed, and that's just the reality. I mean, I know it's not the most convenient thing to say, especially for folks that were trying to start their business either December, January, or February of this year before the pandemic hit. However, there may be other alternatives with them as far as looking for some form of maybe some private investors, just again to be aware of. However, with us, we're trying to make sure that we are going to focus on the already existing businesses that were heavily affected with COVID. And obviously, as Mark mentioned, many of them, are reporting, a drop of sales of 50% or more. However, this is technically just to help them get over to the next level. We're hoping, and obviously none of us have an idea of how long this is going to last, but we are hoping that at least for the next, 2 to 3 months, maybe we can start to see some form of normalcy. This particular program that we've established with the local CDFIs, they are basically allowing a deferred payment. So even after the funding, you're technically you're not going to be required to make a payment, and depending on the CDFI, it can be either from 3 months to 6 months. Some are offering these loans at 1%. Again, these are loans. Unfortunately, they're not grants. But the interest rates literally is just to cover some of the costs that come through with servicing the particular loans. Obviously, many of us who are, who have been in the lending group for so many years, there is a cost of funds. So in order for us to make it affordable for small businesses, if you have any questions with regards to, what would qualify up to 95%, 90%, or 85%, I'll be more than happy to take any particular questions. That's my information. Feel free to email me. That's our website. We do have a couple of links out there that for a couple of the partners that I know have specific information on COVID-19. But the particular programs that we're working with the state and throughout the state of California, we're looking to roll them out in the next 5 to 10 business days, depending on the geographic region. So with that, I'll basically stop sharing and open it up for any questions, please.
Great. So there is a question in chat from Leslie, and she wants to know, are startup dealerships and or franchises eligible to apply?
Say that again, I'm sorry.
Startup dealerships and or franchises.
Well, startup dealerships, again, we're not a platform lender. So if you're, it will really going to be depending on what the funds are going to be used for. But if you're trying to receive some form of platform financing for the vehicles that you're looking to acquire to sell, that it really doesn't apply for that. However, if you're looking for working capital for, say, to cover some minimal, like payroll, some tenant improvements, other items that are not to purchase or to do a short-term financing of these vehicles, you are qualified. Franchises, again, so long as you find, they do qualify, so long as you do find a lender that is willing to provide you those funds, we're still open for business, even at the normal 80% program guarantee. But again, the challenge is going to be during this time is to actually find a lender that's going to provide those funds. If you as a CDFI are willing to make those loans and it makes sense, we're more than willing to kind of review the deal with you.
So we have a lot of TA providers on here too. So that would be, so the TA providers would have to find a lender. Yeah. Sarah, you want to unmute yourself since you're on video, Sarah? Can I call you out? You might as well ask your question.
Oh, sure. Can you hear me okay now?
Yes.
You can hear me? Okay,
yes.
Great. Yeah, Juan Carlos, thank you for this presentation, and thanks for, I think you guys had presented at another point. Working Solutions is primarily a startup and early stage lender. So my first question would be, you mentioned startups, and we're certainly feeling this, but what would be defined as existing for you all? Is it more than a year? Is it 2 years? What definition?
It really depends on the lender, Sarah. I know depending on, especially for you, I mean, you can actually determine if you're looking at a startup. Most startups are usually within 6 months. However, one of our partners at Accion down in Southern California, they're basically wanting to make sure that the business at least has been in existence before December of this past year. So it's really going to be defined by you. And as far as with how Working Solutions, again, if you're looking to take advantage of the 95% guarantee, or if you're looking to take advantage of the 80% guarantee, our normal program, we can work either way. And Sarah, perhaps you and I can talk a little bit offline, and just to kind of provide you a little bit more, just walk you through how you can make the presentations and how to enroll, because it really is a very simple process to enroll.
Great. Yeah, because I have a couple of other questions about it, but we'll just talk offline. Thanks, Juan Carlos.
I mean, if you feel like some of these questions may help the other CDFIs and TAs, please don't hold back, Sarah.
Well, actually, I'd like to focus it on policy, not, and move forward to our federal soon. So if this is something that you think you might want to do, I am going to recommend actually, Juan Carlos, that they reach out to you. Can you pop your address into your email into chat for everybody to copy?
Whoops, I just sent that to just Sarah. Sorry. Let me give it to everybody right now.
Okay. And there's another question in chat about this we get constantly. What about the cannabis industry? Will you guarantee loans for that?
Here's the fun part with that. If you can find a lender that will, if you can find somebody that can lend you the money that qualifies to be enrolled in the program, then yes, we would be able to we would be able to entertain it. But as of right now, I think most CDFIs, because they receive federal funding, that has been restricted for them.
Yeah. Great. Any more questions? Not about how to enroll in the program, but any more questions about accessing maybe some of the other, if you're a TA, some of the other questions. Nina asks, I think Nina, you're from Jedi, right? Jedi. Our understanding is that the $50 million fund guaranteed by the states for loans up to $50,000, and that the best place to look for lenders in this program are on bank.ca.gov program. Is that accurate? It's iBank. Yeah, ibank.ca.gov.
Well, it's actually not accurate. So there's two particular programs that we've established, and the loans that go up to the $50,000, that is referred to as a streamlined process loan program. Specific CDFIs have actually enrolled in that. What that has done, it has decreased the turnaround time and by dramatically. So normally on deals for up to $50,000, we usually turn them around in about 3 business days. With this program specifically, because some of the CDFIs have provided for us already a very specific defined profile of the borrowers that they're going to be assisting. The goal is, if you're going to use that type of minimal document requirement, we are limiting it only to $50,000. However, if your borrower needs more than that, we would basically go through our normal process. So you can still complete, get all of the financials that you normally would, a true credit memo presentation with spreads, with the spreads and create an actual debt coverage ratios. And we would then also take a look at it within our normal our normal approval process. And that's true even if you don't participate in that streamlined process for loans below $50,000. We do have a couple of lenders that have decided not to participate in that streamlined process, the creation of a borrower profile, but they're still enrolling borrowers that need more money or even less money, but have been actually affected by COVID-19, but they don't feel comfortable just establishing sort of a kind of a shelf product, you will, kind of like a score mechanism to just approve loans up to $50,000. So that's where that's where I believe a little bit of confusion has come through. If you're participating in the streamlined process, we can pretty much do a quick turnaround time because we already know the loans that you're enrolling. There is no deviation from that profile that you provided for us. But if you don't want to do that, you can still follow the same process as our normal procedures, which is, again, you would be doing your normal underwriting and approval process. We will be doing our normal review and approval process as well.
And where can they get the names of the banks that are participating? Where is the best place to find the list of lenders? Is it the iBank or the?
Yeah, ibank.ca.gov is the best place to find the lenders that are actually participating. I know iBank is updating their status or updating the information as more lenders are starting to participate, because even though we have several lenders that are interested and they want to do it, they haven't actually participated just yet. Right now, there's literally, I think, only about 4 lenders that have actively participated so far. But like I said, in the next 5 to 10 business days, we're going to have at least another 6 to 7 lenders that are going to be participating.
Great. So that's the place to go if you have clients that are looking for some loans that might not be obtainable elsewhere. Thanks, Juan Carlos. iBank has only 3 lenders and 2 require a relationship. That's where, but as Juan Carlos said, there should be several more coming online coming up. Is that right? That's right? Yeah.
That is correct.
So great.
Many of them are still working on their process and ensuring that they're able to obtain a low cost of funds mechanism so that they can deploy the funds.
Great. Well, thanks. And we'll see, Mark will tell us a little bit more about why some of this profiling, some of the state loan guarantee program, getting this right is important as we move into the federal piece. I am going to share my screen this time. So let's try this again. All right, you should all probably be looking at my screen, and let's just get to the right slide. And I'm going to hand it back over to Mark Herbert, Small Business Majority.
Thank you, and thank you, Juan Carlos, for walking us through that. Yeah, I mean, we're really excited about the state investment in that fund, and we look forward to continuing to work with the Governor's Office and other advocates to support that lending fund and hopefully even increase it and make it more accessible to more lenders and more small business owners. So appreciate you walking us through how that works. So I don't want to spend too long. I mean, we'll sort of go through what happened, and then, you know, we can talk a little bit about what we sort of expect happens next, but then would love any sort of feedback or thoughts or conversation around sort of how some of this is shaking out. So just the big thing to cover is what we sort of already know, what happened yesterday. So the reload, if you will, of the Paycheck Protection Program and EIDL funding finally made it through. President signed it, I believe, today. And so it's live, so it happened. And it sounds like the latest I heard is that the PPP banks will begin processing on Monday, I believe, with the new E-Tran system. And then I believe also the EIDL portal, I believe, should also be going up on Monday. So those obviously are the big updates. The dollars behind them, frankly, not enough, right? I mean, we saw this money go really fast in just a couple weeks, and they're putting another 310 billion in. Don't know how long it's going to last. The one slight sort of silver lining here is at least there's money specifically geared towards CDFIs and community banks. But, you know, at the same time, a lot of community banks have under 10 billion in assets, and so they're going to sort of be competing for the same pot of money as other CDFIs. So it's unclear exactly, you know, how much money CDFIs are going to get here. I think we're waiting on some guidance from SBA and Treasury on how that might actually be allocated, unless someone else on this call has later more up-to-date information on how that's going to get allocated. Obviously, the priority is through 7A channels as they exist. So they're right. There's 30 billion there for credit unions and things like that, and 30 billion for CDFIs and small insured depository institution, and then the 10 billion for EIDL and 50 billion for the actual loan. Right. So it reloaded the grant on the front end, and then also loaded the loan on the back end as well. So that's sort of the snapshot of what's happened. I think the real frustrating part here is that this should have happened a week ago, and so it didn't, and so it ran out of money, and so we sort of got stuck in no man's land for a while, where so many of our small businesses were struggling, and they continue to be at the back of the line. And so this doesn't really solve the problem. Maybe there's be some additional resources for CDFI so that we can get money to those businesses at the back of the line, but because it's not enough, I'm not sure how long it's going to last, and so obviously we have concerns about how effective that's going to be. And so that sort of shifts into the next piece of the conversation around sort of what's next, and how we're thinking about, you know, phase 4, right? So this was sort of like 3.5, right? So technically the PPP and EIDL creation legislation was considered the third bill, the phase 3. That was the CARES Act. This bill was sort of seen as an intermediary step. So people are calling it, you know, CARES 1.5, or they're calling it, phase 3.5. So it's sort of this intermediary. So phase 4 is conversations are already starting around what the next stimulus package will be. It's also called CARES 2.0. So those are the two names of this legislation as lawmakers in DC start thinking about what we should include in it. A couple pieces of the puzzle that we're prioritizing in our conversations in DC that CAMEO has been engaged around as well. One, extending unemployment insurance, right? So making sure that self-employed folks are able to continue to receive unemployment insurance depending on how long they're out, as well as unemployment insurance for folks who need it. More small business assistance, right? So there was a significant amount of money in the CARES Act. Well, significant is relative, I guess. For small business development centers and women business development centers, we want to make sure that those commitments are consistent and are maintained. We know how much work is happening throughout the region and throughout the state to support small businesses. So continuing that investment. And then one of the big ones is really around the SSBCI, or the State Small Business Credit Initiative. And this goes to Heidi's comments earlier and what Juan Carlos just walked us through. So the SSBCI was created during the last recession in 2008. And so you had a lot of money that went to the states, and then the states decided how to get that money to small businesses. The goal was to leverage lending capital. And here in California, we sort of created these two programs, the iBank and the State Loan Guarantee Program that we just talked about, as well as the CalCap program. And I think what's really important as we think about what could be coming from the feds is really making sure that these programs are ready, so that if we do receive additional resources, additional funding from the federal government, that these programs can be primed to actually get the dollars to the really small businesses who have been at the end of the line. So we'll be prioritizing that in the federal conversations and making sure that that's a key piece of the puzzle. But we'll also be working on it here in California to make sure that that we are making these products as accessible as possible to the business owners that we care about. And then the last thing I'll just say, one of the things that we're prioritizing is we've been pushing for grants directly to small business, not through some sort of loan to grant program, but just direct loan grants to small business since the beginning. Hasn't gotten a lot of traction. However, due to the challenges of PPP, due to the fact that so many small businesses are at the back of the line, we are seeing that gain a little bit of traction in DC about direct cash grants to small businesses. So we're still prioritizing that. We have a sign-on campaign. Welcome anyone to share with your network or sign on saying we want cash for Main Street. I think we're up to 5,000 small businesses across the country who've signed on saying we need cash, we need cash to Main Street. And we're using that in our conversations with folks in DC to make sure that they hear that these specific loan to grant programs aren't enough and we need to prioritize the small businesses at the back of the line. So that's what we're expecting to see, and that's what we sort of see coming around the corner, and there'll be a lot more conversations moving forward over the next month or so. Heidi?
Great. Yeah, thanks, Mark. I'm going to call the other Mark in just to talk about what we've seen and to have a discussion and kind of some of the other things we've been thinking about what's next. So Mark, you want to chime in here? I put up this little table of the EIDL numbers. So the U.S. has approved a total of about 27,000 for about $5.5 billion, and in California you have about 7,000 of those for about $1.5 billion.
Sure. Are you picking me up, or am I still muted, Heidi?
I am picking you up.
Okay. Let's see, a couple of things. Mark covered a lot of it on the new legislation, but the just running through some of the numbers that to kind of amplify what Mark was already talking. The other Mark was already talking about. You know, the additional PPP 320 billion for that. The 60 billion set aside is one of the things that's going to be interesting for several reasons. It's not just that it's for smaller lenders. There's two tranches of 30 billion each for small and then very small lenders, where the CDFIs will be falling into. It's also the expectation that those are going to be more targeting to try to reach some of the businesses who were kind of taken out of the first shot of PPP money. There's a lot of complaining and understandably the case where publicly traded companies got the first shot at the first PPP 349 billion. So there's a lot of pushback on that as an issue there. So hopefully we'll get some smaller numbers or larger numbers of smaller businesses in this second piece. On that, this is supposed to start on Monday. I think one of the things everybody should realize is that all of the lenders who are out there have been stocking up their queues of loan applications. And the expectation from SBA people that I've talked to is that the PPP money, that additional 320, with perhaps the exception of the 60 billion that is for the smaller lenders, but the majority of that money is probably already spoken for, in the sense that as soon as the window becomes open, that there's enough lenders that will push those loans that have been already submitted to those lenders push those loans through E-Tran of SBA. And the question is really only how fast, either Monday or Tuesday or some very short period of time, that entire 320 will be spoken for. So I think one of the things to make sure that folks with clients have an awareness of is that if a loan is already in a lending institution of some, either a fintech or a credit union or a CDFI or a regular depository institution, if they're already in, the chances are getting in is probably pretty good. But if they're not, at this point, probably the money will be run through just as fast, or actually much faster than the first go round. So that's
Mark,
something to keep in mind.
Yeah, what do you mean by in?
In other words, in through SBA, sorry. So what, from a lender's point of view, when they review a PPP application and see that it qualifies, they then have to go to SBA. E-Tran is the electronic way that a lender goes into SBA and gets a loan number. Once that loan number is approved, SBA sets aside that chunk of money for that particular loan against the entire pot of money, and then the lender is then able, with that loan number, to make the loan themselves. But that loan doesn't actually show up on SBA until it gets submitted through E-Trans. So when that happens, and my understanding is it's going to happen in a bulk way on Monday.
Mm-hmm.
So that's, keep that in mind on the PPP side. Mark also mentioned the $50 billion for EIDL loans. This has been a challenge to try to get a handle on where we stand on EIDL loans. And I think Heidi you mentioned that you have the chart that we have for where the EIDL activity as of April 20th was the case, and as you said, California got actually a pretty good share, almost 27% of the total pot at that point in time. My understanding is that the 1.6 billion or so in SBA money for California has essentially doubled in the last 4 days. So what was really the case was that the EIDL numbers were really low until that point in time, and now are starting to ramp up pretty quickly. So my understanding for California's EIDL totals is probably double that number right now, 4 days later. So we're seeing a big increase in that. One of the things that's really difficult for people to see in the way that the SBA EIDL numbers work is Mark mentioned there's a $50 billion amount that was appropriated for EIDL. And what that actually is not straight money to be lent, it's really money to be leveraged. So what SBA does is it looks at the loss expectation of each program, in this case EIDL, and then is able to leverage up based on the expectation that will be the losses for the program. And in this case, it's about a 7-to-1 or 8-to-1 ratio. So that 50 billion in appropriated money is 50 billion in subsidy for the program, which will leverage up to somewhere around 350 or 400 billion. The total between the first round, which was about 7 billion, and this 50 billion, the total between those two will leverage up about 400 billion. That said, my understanding is, again, that there's already a portfolio of applications in that should already speak for most of that 400 billion. But the problem with the EIDL loan is you can't know how much is in until it gets reviewed. So there's a lot of applications that are submitted to SBA. They've been staffing up the disaster centers to do reviews. And it's going to take them a while to go through that backlog of applications. So that will be something that you'll see big increases in EIDL numbers in the next couple of weeks, because it's been a process of getting that underway and getting some volume of activity there. So that's on the EIDL numbers side. And then the last piece of it, of course, is that 10 billion in emergency, which is my understanding, again, that will be done with the 1,000 per employee rather than the original understanding, which was 10,000 per business. A couple of the other changes, like I said, I think with the PPP part, that in addition to asking back the money from the publicly traded companies that did get some money, and I think some of them are doing it for good optics, it's going to be a requirement that if you're a publicly traded company, that you would not be getting into the second round of PPP. So that's something to keep in mind as well. And the biggest issue that still is going to keep coming up is for sole proprietors and for very small businesses and for businesses who have a hard time because their lender is not one that is participating in the program, or they have to find a new lender that is not already their own, that they're a customer of. That's going to be really where the challenge is, to try to figure out how to get to the smallest businesses and the ones that don't already have a bank that's doing PPP loans, because those are the folks that lots of frustration that have been the case up till now on that.
Yeah, so a couple questions come to mind, Mark, for that I heard this morning. I was with Mark Herbert, with the other Mark, and there were a lot of business owners are if they're sole proprietors, are they eligible for they're eligible for the PPP, I know that, but are they eligible for the EIDL? They
are. They should apply for both. Okay. Yeah.
And they should apply for both. And that was going to be my next question. Should we be encouraging people to still apply if the money's run out?
Yeah, the money will run out pretty quickly. So as soon as the window opens, and even though the window will open and then close fairly quickly, people should submit applications as soon as they have the opportunity to do that. So keep in mind that from the SBA side, when the window is closed, SBA can't accept applications because of an anti-deficiency rule that says that the federal government can't accept applications and make commitments without funding to be able to fund those, appropriated money to fund those. On the lender side, though, for PPP, they can continue to accept applications. They just can't submit them to SBA. So that's where everybody's expectation is, that there is probably a huge backlog of PPP applicants that are sitting with lenders that will be pushed into SBA as soon as it's possible to do that.
Carolina got this question in her email that says, hey, I have applied for an EIDL $10,000 grant last month. Do I have to reapply when it opens up again? Yeah,
no,
we've gotten...
Yeah, they're already in-house. Anybody who has submitted and has gotten an acknowledgement from SBA that they have that their application has been submitted and received is in the queue, and they are continuing to work through those. And there's still EIDL loans that are being approved. It's just that they're not accepting applications at this point until, as my understanding is, until Monday. So the expectation is that if you are in already, you are already in.
Okay, so if you're in, you're already in.
And one other point to mention is that if they submitted and they did get one of the emergency 10,000 or some share of that 10,000, it doesn't mean that they're going to be approved, but the likelihood is that if they were not going to be approved, they probably would have heard that now, because they would have picked up that the application that they had submitted would have been not approved. So it doesn't give them a guarantee that they'll be funded, but it's a pretty good likelihood that will be the case.
Okay, that's nice. Are there other questions that anybody has on this? On this, we have just a few minutes left to the top of the hour. We can stay on for longer if you all have questions. I think our advice this week is the same as it was last week, is make sure you have a relationship, or your clients have a relationship with the lender. And Mark, I know you might know of a couple of the lenders, and Mark Herbert, I know you know a couple of the lenders have a resource where people can get find out who are doing loans. So if you want to pop those into chat. If anybody else has a question, you're more than welcome to unmute yourself and ask it, or type it into chat.
So I popped into chat a list of banks and lenders that we've been tracking As of yesterday, these folks told us that they were accepting. If you find any folks, if anyone in there that is not, please let us know and we will take them off. We're updating that every day as we get real-time information on what lenders are accepting outside applicants and which are not. So hopefully it's up to date, and we're welcome any feedback.
Great. Thanks, Mark. Yeah, I have a couple questions in the chat, and we will stay on as long as you guys want us to stay on. So Bill Buss asks, what is the funding amount of the EIDL loans? Does it still go up to $2 million? Is there a formula for how much a business qualifies for? I can answer the second part a little bit, is that we did a webinar on actually how to kind of come up with that. But Mark, you want to address that?
Yeah, the first answer is yes, the $2 million still is the case. That hasn't changed. There has been some changes in what the requirements for the program in terms of collateral and personal guarantees. But the main thing is that's very confusing for folks is that for EIDL loans, you don't apply for a certain dollar amount. You submit information to the lenders or to the SBA disaster program, basically saying here is my need for operations for a period of time, say 6-month period of time. And so that need for operational funding, which is working capital money that you would be getting, is based on the cost of your business to keep its operations going, which would be payroll and all of the other utilities, rent, fixed costs that the business would have. So an SBA loan officer doing disaster lending determines what's the minimum necessary to keep all of the functions of your business operating, with, in this case, saying, assuming that no business revenue coming in, all the expectation of what costs you have that need to be covered during that period of time. And then the last piece of it is they also look to see, because this is a deferred loan, there won't be any payments until next year, but still the expectation, looking at financials, to see whether the business has the capacity to continue to cover the additional EIDL debt at that point in time. So if a business has been losing money and does not have an ability to take on more debt, that's typically for credit or for inability to carry more debt. Those are the typical reasons that they decline loans for EIDL. In this case, though, sorry for this long answer, but in this case, there's very little data that is submitted from a lender's point or from a borrower's point of view going in. So they're going to strip down a lot of the review of EIDL applications, but typically an EIDL application is saying, what is it that's your minimum necessary cost that you need working capital to cover for the period of the duration of the disaster? And since that is an indeterminate period at this point in time, I think people are using 6 months or 9-month periods of time. It can be added to as the need would require.
Great. Thank you, Mark. Mark Herbert had to leave, so I just want to thank him post-webinar. But the next question is from Wendy. Wendy has a client that submitted an SBA application. It said it was withdrawn. Do you know what that means, Mark?
Withdrawn by the borrower or withdrawn by SBA?
Wendy? SBA.
I don't know what that would be. I would follow up with the disaster office to find out what the status of why it was withdrawn. A borrower can submit an application and then decide not to take a disaster loan at any point in time. But as far as withdrawn, I'm not sure what the circumstance would be on that.
All right. Well, if anybody has any other questions, feel free to type them into chat. I'm just going to mention one more piece of what CAMEO is going to start thinking about next is helping small businesses re-enter and starting that conversation. We had an earlier conversation. We know there's some issues. Should businesses re-enter? How should they re-enter? What should they consider? All that kind of things. So Candida, I was just about to tell you, yeah, if you can put your name into chat and say also re-enter in that if you're interested in participating in that conversation, or if that's a topic of interest to you, that would be really helpful for us. And with that, I'm going to ask Mark if he has any other closing thoughts, and if not, I'll tell everybody to have a lovely weekend and really pat yourself on the back. I think one of the reasons why California got so many EIDL loans is because you all were so prepared in helping your clients. So, you know, really take some time to you know, give some kudos to yourself and feel good about what you're doing. Mark, any closing thoughts?
Thanks for all the good work that people do. Stay healthy. Wash your hands.
And have a good weekend. Bye, everyone.
Okay.